Okay, I'm going to go on a little bit of a rant here, and for no other reason than to try to bring as much attention to this problem that we have in crypto, in the crypto sphere, the crypto space. I think that this really deserves attention, and we have created a company and informed the entire strategy behind it because of this issue, right? So we're going to be talking about DeFi, and we're going to be talking about why we see ourselves in the shitstorm that we see ourselves in right now, where we saw this past weekend Bitcoin going down to 17,500 or close to, just above. Are just on the cusp of getting global adoption, or moving in that trend, in where we have very serious people, very serious companies, governments that are looking at buying massive amounts of Bitcoin. And we've seen publicly traded companies, private companies, governments already doing this. But now we see all this volatility, and it's not all caused by crypto. It's mostly caused by world global events in the marketplace, and inflation, and wars, or the possibilities of wars, and there are many factors that play into the volatility of financial assets. But what I want to talk about with DeFi is a big mistake that DeFi has been making, in my opinion. And that's that DeFi has been collateralizing itself against itself, or meaning that crypto is backing crypto. So Bitcoin and other assets is backing Luna, and that was a massive failure. And crypto assets are backing Tron, and you've got companies like MicroStrategy that are taking out big loans, like hundreds of millions of dollars loans, with their against their collateral, which is Bitcoin, right? So, and when they take out loans, they have to adhere to certain LTV ratios, and I think with MicroStrategy it's 50%. I think it's great that these companies are accumulating so much Bitcoin, especially something like MicroStrategy, because they're in it for the long haul, and they're a major miner, right? So, but the problem is that when you back your token against that, and we start seeing like global events happen in the financial marketplace, and we start seeing that the prices of stocks and commodities and cryptocurrencies start to fall, a lot of these companies, in order to meet their peg, like UST or USDD, they have to start selling out of their collateral assets, such as Bitcoin, where, like, with the more famous one is Luna, right? So Luna dumped like $3 billion of Bitcoin, and that caused Bitcoin to go from 32,000 down to like 30 or 28,000, right? So I'm just like, these are general numbers. I'm not being very specific, but you've got major companies like MicroStrategy, Tesla, Galaxy Digital Holdings. You've got all these Bitcoin miners, by the way, that earn Bitcoin as they're mining and validating transactions. That's a very expensive thing to do, and as Bitcoin continues to drop in price, they're going to have to start offloading their Bitcoin to pay for their expenses, right? So this is what's causing a lot of the sell-off, and it's a mistake, not in every case, but it's a mistake to heavily back crypto with more crypto. It would be safer to back crypto with other commodities, or precious metals, or just to the dollar, or to a domestic currency, right? So and that's not always the best case, and there's not like a right way to do anything. It's, in my belief, it's kind of just doing a little bit of everything to pulling a little bit of all the levers to find the right balance. But when we collateralize and put so much on Bitcoin like that when this stuff starts to happen, it creates these massive sell-offs. So that's with Bitcoin, right? And that's what we're sort of seeing right now. But if you look in DeFi and you look at all these projects and all these companies that are creating tokens, they're pairing them with BNB. They're pairing them with Ethereum. And this is a very scary environment for investors, because when an investor is looking at a project or a company and saying, hey, should I invest in this company? Yeah, I mean, look at it. Wow, it's gone up like 300%. That's incredible. Sure, I love the white paper. They're up 300%. Let's do it. Let's invest. Let's put our life savings in it. What they don't realize a lot of the time is that valuation is often misleading. If they're paired with BNB, if they're paired with Ethereum, and Ethereum or BNB is up 300%, then even if that company or project has no trading volume whatsoever, they're going to appear on the chart that they've increased 300%. This is wildly misleading, and there are thousands of projects like this. And I think it's really important for investors, and I think it's really important for projects, and really important for companies that are creating digital currencies or creating tokens to back those tokens against a stablecoin. Right? This is going to strengthen the stablecoin environment. It's going to make that stronger. I wouldn't do it against an algorithmic stablecoin. That's just my preference. DCAP, our company, we paired with USDC. Right? So as these market conditions happen, like where Bitcoin is going down or up, or Ethereum or BNB, that doesn't affect DCAP. That doesn't make DCAP's price go up or down. Right? So when an investor is looking at, hey, do I want to invest in DCAP? Or do I want to invest in any company or project that's paired with a stablecoin? The value of that company, the value of that project is based on that project, is based on their work and what they're able to accomplish. And it's their investors buying and selling that's going to change the value or the valuation of that project. And so I think that's super important that we should do that. And so I'm going to highlight exactly what I'm talking about. I'm going to take a contract that's like not even trading, and it's a famous one. We're going to take, let me pull it up here. We're going to take SafeMoon. I did a couple, but I think we're just going to focus on SafeMoon's old contract. Okay, so check this out. SafeMoon's old contract is up right now. Where are we at? It's up 4.8%. Now let's look at BNB. BNB is up 4.9%. Okay, look at this. SafeMoon, which has a volume today on this contract because it's like not even trading, $212. $212, and they're up 4.8%. BNB has a volume of almost $1.2 billion, and it's up 4.9%. This right here, and this is the same, whatever, this is DeFi AI, it's the same. If you look at the charts, I'll bring this down, they're identical. BNB and SafeMoon. They're identical. And that's because SafeMoon, in this example, is backed by BNB. Okay? So as BNB goes up, SafeMoon goes up. That contract's not even really trading. It's $212 of volume. It's because it's backed by BNB. So as BNB goes up and down, it does. I've said that like several times. The point that I'm making here is that I believe that a lot of people are making uneducated investment decisions. We want to be very careful about this. I think it would be best for DeFi, and I think it would be best for projects and companies and investors to be safe about their investments, to not invest in projects and companies that are piggybacking off of whatever BNB or Ethereum is doing. It's not safe for them. It's not safe for our investors. Yes, it has a compound effect going up. It also has a massive compound effect going down. Because when people think that BNB or Ethereum is going to drop, which is basically saying is Bitcoin going to drop, then they're going to pull out of these investments, and it's going to hurt projects, right? But if these projects and companies are paired against like USDC or BUSD or some other type of stablecoin, there is no real reason for these investors to get out of that unless the project itself has issues. Right now we're seeing people go in and out of projects because of these third-party tokens. We don't want to see that. That's not going to be a strong investor place. And that's why I really believe that people should model the DCAP model, right? The DCAP model is we pair with a stable coin, and we use our work and the money that we generate from our work and from our transaction fees, that we take that and we purchase real estate assets, and that backs the token. Why? Because it's a historically proven asset that not only generates cash flow, but it also backs in a more stable way the value of our company, right? Because real estate historically has not had these wild fluctuations that we see with other assets, financial assets like Bitcoin, right? So it'd be better if companies started backing themselves off of commodities, precious golds, even bonds. Even though they can, have a negative yield, it's still safer in the long run. It's still less volatile than backing itself against crypto. Not sure I'm making total sense, but I'm telling you, this is the way. This is something that we really want to focus on it, and to make smart decisions about who we're investing in and what we're investing in. We want to make sure that their infrastructure is set up to be at least in a stable environment, that where it'll go up and down based on what that company and that project does, and not what BNB is doing, not what Ethereum's doing. So I'm going to be talking about this a little bit more. We're definitely going to be hitting on this narrative throughout our whole journey in launching DCAP. So if you guys have any questions, please feel free to reach out. Our whole team is excited to engage and eager. Take care. Have a great day.